Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Sintana Energy, Inc. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Sintana Energy, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Robert Bose, President of Sintana Energy, Inc., which trades on the OTCQB venture market under the symbol SEUSF and on the TSXV under the symbol SEI. Welcome, Robert.
Good morning, Matt. Thank you so much, and thank you to everybody at OTC Markets for having us participate this morning. We're grateful for that and for everybody's time. As Matt mentions, my name is Robert Bose. I'm the president and a director of Sintana Energy. Sintana is a exploration company focused on the oil and gas business. We endeavor to put together a portfolio of exposure to extremely large exploration outcomes on a carried basis. And so just to unpack what that means from our perspective is we structure our investments such that other people spend money on our behalf to move the exploration process forward on the assets in our portfolio. We do that by focusing on a handful of things. Again, we focus on a portfolio of exposures to very large projects with very significant upside potential. We target opportunities in regions that offer, not only very large potentials, but where we see activity increasing. We like to be in early, but alongside people that have both the technical and financial wherewithal to deliver the very large outcomes we believe are in place. We try and work towards partnering with very experienced operators and other companies that have both the technical expertise as well as the financial wherewithal to deliver those outcomes, as we'll talk about over the course of the next little while. We are variously partnered with Chevron, Exxon, and Woodside on certain of our assets, and we look to partner with people who know what they're doing and have the balance sheets to support it. As mentioned, we structure our investments to limit the need for further capital from us to achieve these outcomes. And, very importantly, we are focused on developing and growing these assets to allow us to exit them at very significant returns for our shareholders. So we are in the money-making business. In terms of the portfolio, we've had an asset in Colombia for about 10 years. I think it's emblematic of our approach and strategy. We are partnered with Exxon on a 43,000 acre exploration block in the Middle Magdalena Basin in Colombia. Exxon has already spent $60 million on this block. And when activity resumes, we'll spend upwards of another $100 million on exploration and development here before we have to spend anything. So again, emblematic of the opportunity to partner with a world-class operator who is going to spend a lot of money to move our project forward. In terms of thinking about where we see value getting created in the shorter term, the other portion of our portfolio is located in Namibia. As we'll talk about in a few moments, we closed the acquisition of an interest in a private company that had predominantly carried interests in 4 offshore and 1 onshore license. As we'll unpack in the next few minutes, there's been a number of multi-billion barrel discoveries in offshore Namibia, establishing it as the world's next most exciting exploration geography to rival, if not exceed, the recent success in Guyana. And again, to the point of looking to be active and exposed to geographies where activity is increasing, we have seen the entry of Chevron, Woodside, in addition to Galp, Shell, and Total, all of whom are actively exploring in and around and on our assets in Namibia. So to kind of hit the punchline early, and one of the takeaways for today in terms of why invest, Sintana is the only public vehicle that provides exposure to the heart of the Namibian Orange Basin on a carried basis. We've got a number of catalysts in the very near term, each of which could be a company maker on their own. As I've been kind of pounding home here, we have limited further capital requirements due from us for the foreseeable future. And we've got a very experienced team around the table that's focused on delivering the opportunity. In terms of Namibia, just a high-level snapshot of the portfolio. As I said, we acquired an interest in a company that has interest in a number of licenses. Three of those licenses are located in the Orange Basin. You'll see that towards the bottom half of the map. PELs 87, 90, and 83 are all located in the Orange Basin. Immediately above the most recent discoveries by Total and Shell, which we'll describe in a moment. And on those blocks, we are partnered and carried by Chevron, Woodside, and Galp, which is the Portuguese oil major. We as well have exposure to the Walvis Basin in the north, and as well to a block onshore, not too far from some of the recent exploration activities in onshore Namibia. I would say, as noted, no one else has the same level of exposure to this emerging geography that we do, certainly on a carried basis. Just in the interest of time, just digging into the Orange Basin licenses a little bit. So PEL 90, sort of right at the center of the map there, is right above Total's Venus 1 superfan oil discovery, which we'll talk about in a moment. Chevron farmed into that block. They just completed a $30 million 3D seismic shoot, which they carried us on, and on the other side of which we expect an exploration well, if not a few, and we will certainly be carried on that first exploration well. And if there is a discovery and they choose to proceed with further activity, there's bonuses payable to us, which will allow us to continue to stay with the activity. Adjacent to that is the block PEL 83, operated by Galp, as I said, located immediately above Shell's most recent discoveries on PEL 39, which we'll unpack in just a moment. And above that is PEL 87, home to the SATURN superfan, one of the largest subsea fan complexes in the offshore business in West Africa, almost 10 times the size of some of the subsea fans in the offshore of Brazil. And we just had Woodside to enter that block. So again, as mentioned, we are uniquely positioned here right in the heart of the Namibian Orange Basin. Just to provide a little bit of sort of timeline and context, we closed our acquisition of this portfolio in March of last year. On February 4th, so about a month before we closed, Shell announced that it had made a major discovery on PEL 39, GRAFF-IX. This was initially estimated to be about 1 billion barrels. Current estimates of the GRAFF-IX discovery are in excess of 2 billion barrels. This is Shell's largest discovery in sub-Saharan Africa since the mid-1990s. The phase 1 recoveries at 700 million barrels, based on some work that was done by Wood Mackenzie, returns a $2.8 billion PV10 value at $50 Brent. There is a whole inventory of additional locations here. Shell has actually drilled additional exploration wells here, specifically the Lerona and Jonker wells. These are each returning 400 to 1 billion barrels in additional recoverable oil reserves. In addition, not only are they demonstrating the sheer scope of this block, but the most recent announcement of the Jonker 1 well demonstrated that there are multiple horizons of prospectivity here. So there are reserves at various levels, which is exactly the setup that we see in Exxon's very successful developments in Guyana. About 20 days later, Total announced its record-breaking discovery at Venus. It's a giant light oil and gas discovery. It was one of the deepest, most complex exploration outings globally in many years. It's in over 3,000 meters of water and another almost 4,000 meters of subsurface depth. It surpassed its initial pre-drill estimates, which were 1.5 to 2 billion barrels. Post-drill, the estimates are currently in excess of 3 billion barrels. The phase 1 recovery, again, work done by Wood Mackenzie, of 920 million barrels at $50 Brent returns a $3.5 billion NPV. Total has already initiated a multi-well drilling program on this block, currently ongoing. It is dedicating over half its 2023 global exploration budget to this block. The CEO of Total, in some recent comments, called this one of their golden blocks. This could be the block that demonstrates that the Orange Basin is bigger than Guyana. And so again, we maintain our interests in PEL's 90 right above Venus and PEL 83 right above Shell's discovery at PEL 39. Given time, I won't spend too much time on the geology here, but suffice to say the nature and structure of the subsurface geology, in addition to its sweep off the continent on the shelf of West Africa, looks very similar to what we see in offshore Brazil and Guyana. Part of the interest to be involved in this particular geography was as a result of seeing what is called the Atlantic margins idea, which basically sort of contemplates the similarities of what we see in offshore Brazil and Guyana with these formations in offshore Namibia, and certainly the recent activity is beginning to demonstrate that that is the reality of the situation. Just to talk a little bit about some of our blocks and PEL 90 specifically. So again, PEL 90 is located directly above Total's discoveries at Venus. As I mentioned, Chevron entered this block in October in exchange for operatorship and an 80% working interest. Chevron made an upfront cash payment to us. They as well paid for the entirety of a $30 million 3D seismic shoot, which was the acquisition phase of which was completed about a week ago. Upon completion of interpretation and processing of that seismic data, the expectation is they will drill an exploration well sometime either late this year or early next year. And if there is a discovery, there is a discovery bonus which is payable to us, which we can use to participate in further appraisal activity. So this is just a tremendous example of our business strategy, which is to get into an emerging, large, exciting geography early, and then attract, world-class partners to come into our assets where we retain significant interest, but they carry us for the associated expenses. So very, very excited about this proof of concept, and I think further evidence that what we were thinking about the Orange Basin and offshore Namibia is shared by some of the most sophisticated, largest global oil majors. PEL 83, located right next door, is operated by Galp. Galp is the largest oil and gas company in Portugal. There's been very significant geoscience work which has been done over this block over a number of years, including 3D seismic shoots in 2019. Galp is likely to drill a well on this block itself sometime over the next few quarters, and we are carried on this block by Galp through production. So we will look forward to their progress on our behalf. PEL 87, located above PEL 90 and PEL 83, as I said, is home to the SATURN superfan. This is one of the largest subsea fan complexes globally. It's 2,400 square kilometers. It's just massive. There are many, many leads which have been identified through a fairly significant history of seismic work. About 2 weeks ago, we announced that Woodside, the Australian supermajor, had entered into an agreement where it has an option to acquire 56% of this block in addition to operatorship upon completing a $35 million, 6,800 square kilometer 3D seismic shoot. The vessel which was being used by Chevron on PEL 90 moved immediately to this block. So the acquisition is already in process. The expectation is that the acquisition of data will be fast-tracked. We should see that be completed in June with a view to, again, some drilling activity upon Woodside exercising its option sometime before the end of the year or early next year. And we will be carried by Woodside on that first exploration well and the existing operator actually carries us beyond that. So again, another opportunity and demonstration of exposure to very large outcomes partnered with world-class operators where no additional capital is required from us to see the next few exploration milestones. Just in terms of framing kind of the size of the prize, this is one of the things that was very attractive to us. You'll see in sort of the graphic on the right, um, pictures of the Saturn superfan, which is in Pell 87, and then the Venus superfan, which is Total's asset right below us. Those are shown at scale in comparison to Jubilee, which is the largest offshore fan in Ghana, one of the largest historical discoveries in West Africa. And as well compares it to Marlim, which is in offshore Brazil. This is the largest producing field in the offshore Brazilian region. These superfans in Namibia are between 5 and 10 times the size of those two formations, which historically have been some of the largest offshore oil discoveries that have been made globally. So we are very excited here. I like to say I am a super fan of the superfan, but we were very pleased to see continuing progress and activity on these blocks, which hopefully will demonstrate that the scale is here to make the Orange Basin in Namibia the world's next great global exploration geography. We, as well as part of our portfolio, acquired an interest in a license in the north in the Walvis Basin. This has been home historically to a significant amount of activity, both with respect to geoscience, including 3D seismic acquisition, but as well actual drilling. 2 wells have been drilled on our blocks. They returned very high quality light oil. They were unfortunately not commercial, but the presence of hydrocarbons has been substantiated. You'll see immediately below Pell 82 a few wells identified as Aurora and Serenade. Those are on deck to be drilled by Morel and Prom, which is the French E&P company, in 2023. A number of other operators, including Africa Oil and Eco Atlantic, that owns exposure around us, are very excited here. They feel as though the potential for the Walvis Basin could equal that of the Orange Basin. And so we are looking forward, again, to more activity around us while we focus on some of our efforts in the Orange Basin in the south. Pell 103 is our onshore block. It's located about 55 kilometers south of blocks 18, 19, and 1820, where there has been some onshore exploration activity. We have no current cost to maintain this block. The work program is very back-end weighted, so we hold this for no cost. It provides us some optionality with respect to potential success onshore, but for the moment, we are very focused on our offshore asset. As mentioned, we've had an asset in Colombia for a number of years. We were partnered with Exxon. Just given the fluidity in the domestic political environment, the project is on pause, but it sits right in the heart of the Middle Magdalena Basin. Our exploration block is VMM 37. As I mentioned earlier, Exxon drilled a well in this block to a depth of approximately 14,345 feet. That well was fully cored and logged and returned geologic parameters which equaled some of the best shales in the world, except for that the shale thickness was 3 to 4 times thicker. So this is, as a geologic and asset matter, a premier world-class asset. This itself could be a company maker to Sintana. And when activity resumes here, Exxon will spend over $100 million in moving the exploration and development ball forward before we have to spend anything. So not right at the center of the focus at the moment, but a tremendous bit of optionality for the portfolio. Just in terms of the cap table, pretty simple, pretty straightforward, 390 million shares fully diluted outstanding. And to say we think this is an attractive attachment point is probably the understatement of the morning. We just feel like there's just huge upside on the horizon here, and the market is just not seeing it. So we are very excited to watch the next few quarters unfold and see that get reflected in the share price. So just to conclude, we feel like it's the right time. We are in the right geography with the right partners exposed to the right things. Our exposure in offshore Namibia and the Orange Basin is without peer in the public markets, certainly on a carried basis. Our partnerships with some of the world's largest, most sophisticated, and well capitalized super majors, including Chevron, Woodside, Galp, and Exxon, provide us with exposure to these outcomes with really no further capital or other resources required from us. And as we've mentioned in passing, there's a tremendously experienced team around the table, and we are singularly focused on delivering the success we believe is in the offing here at Sintana. So that's sort of the end of the presentation. Happy to look at some of the questions we have. The first question is, if the PEL 87 option is exercised, what is a reasonable drill date for first well at PEL 87? I think it's reasonable to suppose that a well will be drilled on PEL 87 sometime before the end of the year. Would be an aggressive outcome. Sometime in Q1, I think, is reasonable. There is fairly significant 2D seismic on this block. Woodside is moving very quickly to overlay the 3D seismic acquisition process. As I mentioned earlier, the vessel that was working on our Chevron block at PEL 90 moved directly to this block, and we expect the acquisition to be fast-tracked and completed by mid-June. The license for PEL 87, its current period expires at the end of 2024, so we would certainly expect activity prior to that, but I think around the table there's a real desire to move quickly and get going. So I think a drill date for a first well sometime before the end of the year or early next year is reasonable. A second question, any interest on the part of Sintana to expand into the Walvis Basin or northern Namibia, where Exxon has an area of interest near Angola? The announcement this morning about Exxon and Sona Angola prosecuting the Namib Basin in Angola was very interesting to me. We do have PEL 82, which is located at the heart of the Walvis Basin. Exxon actually used to operate that block. It relinquished operatorship a few years ago while it was focusing on other assets. So, we certainly have exposure to the basin. We're right at the heart of it. Eco Atlantic, one of our sort of comparable companies, owns many of the blocks around us. We are very excited to see the announcements, as I said, from Exxon and Sona Angola this morning. We have some optionality. We're happy to look at additional opportunities, frankly, anywhere. They just need to sort of comport with our overall strategy. It's difficult for us to think about, multi-million-dollar signing bonuses to acquire exploration blocks without having partners and kind of visibility on farm-ins. If there are opportunities to acquire additional low-cost exposure that we feel is either already carried or can be carried relatively easily, we would certainly do that. But I do want to be clear, we already have exposure in the Walvis Basin. And we are very excited about some of the developments just on the other side in Angola. The next question is, what were the cash payments paid to Sintana on these two blocks? On PEL 87, there is no upfront payment at the moment. Woodside has entered into an agreement wherein it will spend $35 million shooting 3D seismic. Upon completion of that, it has the opportunity to exercise an option to acquire a 56% participating interest. 1% of that would come from our Namibian holding company, which owns 15 percentage points in the block today. So that would take us down to 14. And I believe the upfront payment associated, should they choose to do all of that, is about $1 million to us, which is really just cost recovery. It does value the block very highly, but I think, more importantly is the fact that they're going ahead and spending $35 million on the block without having anything to start. So no payment at the moment, but hopefully one, which is more important as emblematic of a desire to step into the block than actually large dollars in the door. On PEL 90, we did receive a cash payment, which was disclosed in our financials. It was just under $4 million US, and that was as part of Chevron's entry into the block. Just see other questions here. Besides G&A, what other financial commitments do you have for the next year? We don't have any. Just to sort of expand on this a little bit, we have approximately $4 million in change on hand. Sintana's annual G&A burn rate, including providing some coverage to our Namibian subsidiary, all of our relevant public company costs in G&A at the Sintana level, marketing, IR, audit, all of that is less than $1 million a year. So based on what we know right now, we have more than 4 years worth of overhead carry, and we have no specific financial commitments at the moment, certainly over the next year. The next question, what would be the catalyst to progress on your Colombia project? The situation in Colombia is very fluid at the moment. The most recently, sort of not so newly, but as of last summer, newly elected administration is working its way through revisiting its views on extractive industries in Colombia and how it wants to move forward. We have been in country for close to a decade. In terms of catalysts to move our project forward would be sort of the reemergence of the pilot process to investigate unconventional development in Colombia, which is currently on pause while the government sort of looks at various pieces of legislation associated with extractive industries. So it's a bit of a difficult thing to read at the moment, but we stand by together with Exxon to move when we can. Next question, can you talk about the water depths of our Orange Basin blocks? What are the milestones upcoming that will determine whether Chevron and Galp will finalize a first drill date? Any plans to get some sell-side coverage of the name to close the vast undervaluation gap? Well, I certainly agree with the vast undervaluation gap. Let me just go back a few slides here and we can look at, there was actually a slide which has the water depths on it. Bear with me for a second. In the Orange Basin, so our licenses in the Orange Basin are 83, 87, and 90. 90 is the one that's furthest offshore. This is the block that Chevron's just completed the 3D seismic acquisition on. So that's, variously between 2,300 and 3,000 meters of water. 3,000 meters of water would be roughly the depth that the first Venus exploration well was drilled at by Total. So that's kind of what the water depth looks like there. As we move north and closer to shore, unsurprisingly, the water depths, certainly at their minimum levels, decrease substantially. PEL 83 at its shallowest is in 250 meters of water, but the shelf falls off quite quickly on the other side of the KUDU gas field, closer to our boundary with PEL 90 at 2,500 meters of water. And then PEL 87 is just a very large block. This is 11,000 square kilometers. It's an entire line of longitude and latitude. And so the water depths vary greatly, but you see them here between 420 and 3,200 meters of water depth. What are the milestones upcoming that will determine when Chevron and Galp will finalize a first drill date? Chevron, the process there is the 3D seismic acquisition has been completed. They are in the process of processing and interpreting the resulting data with a view to refining the very significant prospect inventory that is there. Once they are able to confirm and then high grade and prioritize, hopefully a inventory of prospects, they will choose the one they like best and go ahead and drill it. Again, as we've talked about a little bit, the expectation is that that'll occur sometime late this year or early next year. Galp is working through its corporate process to finalize the details of a first drill, including the specific location. There's a very deep inventory of PEL 83 substantiated by 3D seismic, but they are working to finalize the details. So we expect that to happen here shortly. I'll just finish it off. I know we're running out of time, but in terms of analyst coverage, We would love to have some analyst coverage. We have been talking to the folks at Echelon in Canada about providing some coverage. They worked with us on our capital raise last year. We have been working hard to put Sintana on the radar screen of a number of the analysts that cover some of the relevant peers, including Eco Atlantic, Africa Oil, Africa Energy. Some of our conferences in Europe, some of the Scandinavian banks provide coverage. So we would love it. And it's certainly on the radar screen. Just tough to get them interested when they don't see a lot of capital raising ahead, but we are certainly working on it. So I think that's it for time. I'm a little bit over here, but I certainly thank everybody for listening today, and we look forward to any interest on